Yeah, if you prefer using the candlesticks instead of the line charts, it works almost the same. I personally prefer the line chart because it shows me only the close, and that's what I'm really interested at. But I sometimes just go back and forth, and sometimes I make my trend lines on the candles, and then I compare it to the line chart. But it's not so important. So at this point, I know what trades I'm looking for. I'm looking only for long trades. I know that when the 75 minutes will change, will break trend line, when I will see indication on the CCI. At the moment it's up there, but it can go on still for a long time. Based on the 270 minutes, I think that there is still some ways to go, but I'm not here in the guessing business really. I follow my indicators. So when the 75 minutes will change color, when this trend line will be broken, when this trend line will be broken, the RSI will break first before the price. That's just the way it is. The RSI, the trend line will break before this trend line. But doesn't matter. When my color will change, when I will see that when my indicators show me that it's turning, I will stop taking longs. And when the 270 minute time frame will turn, I will start only taking shorts. So this will be the steps. Here I will stop trading, and here I will start trading, looking for short trades only. At the moment I'm only long, and I will not stop until things changed. So this is the first part. Now, in order to make my entries, I go to the very short time frames, to the 5 minutes, to the 5 minute time frames. So let's put the 5 minute on, and 1 second. Okay, so I put the period separator on. It depends on your broker and what time zone your broker is at. Mine is in England, so the period separator, it just happens to be the beginning of the Asian session. And this is the beginning of the European session, the beginning of the Asian session, the beginning of the European session. What I do, let's get rid of these lines here. Horizontal, 1, 2, 3, and 4. What I do is I check the average range of the average daily range of the pound USD, and at the moment it's 181. It changes, but it's around. It could be 170, it could be 200. At the moment it's 180 or so, and I because the average range is 180 pips, I'm not gonna try and go for 200, 300 pip move a day. No, once the 180 pip, once the market moved 180 pips per day, then there is no real need to stay in the market looking for to make more pips, because it is not likely that the market will give it to you. Of course, it's possible. Some days the market trend 200 pips, 230 pips, on the pound USD, but it is more likely to give 180 pip moves or so. Why is that important? This is important for my my take profit, and this is also important if I'm going to take a trade. And let me explain what I mean. We said that this here is the beginning of the Asian, and this here is the beginning of the European. An hour later is the beginning of the London. Right here at the end of this candle is the beginning of the London, and the end of the Asian. So the Asian goes from here to here. Here begins the European, and here begins the London. I mark the high of the Asian, and I mark the low of the day. The low of the Asian is the low of the day because the day started right here. Now I'm going to be waiting for a break. This is a Friday, so it's not the best example, but this is a very on a Friday the market does not really move so much in the afternoon, because some traders take out their positions because they don't want to leave it over the weekend. Some traders want to take their profits, or some traders, they just don't really trade because there is not so much movement on a Friday afternoon. But nevertheless, I take the height and I take the low of the day, and I'm looking for a break to the upside in this case. Usually the break will happen sometimes in this area, but if not, you just have to stay awake, or it depends on what time zone you are, and wait. My entry would be at the break of this line, at the break of this high, but not right away. I will let the market break, then I will wait for the next candle that does not make a new high, and after this, okay, so this is right here, there is new high, break of the high of the Asian session. This candle does not make a new high. This candle still does not make a new high. This candle make a new high. My entry would be right here at the height of this candle, at the break of the height of this candle. However, in this case, since the low is right here, you see, this is my take profit. My take profit, I open two positions when I enter. Usually I would enter right here upon a break, but there is one condition. I open two positions, one of them, and I put my stop loss right under this pullback. See, it went up, it broke the height, and it pulled back here. My stop loss would be here, minus 5 pips minus the spread, so minus 8.5 pips would be about here or so, my stop loss. But this and my take profit when I open the two positions, both of the stop loss would be here. My take profit would be 110 pips from the low of the day. The first one would be 110 pips, which would be right here from the low of the day. So let's mark everything. My stop loss would be somewhere around here. My entry would be one second.